have Oliver Slope with us right now. He's with Blue Line Futures in Chicago. Let's talk about the market action so far here today. So the soybean trade seems to be by far the winner on the grain side. Why is that, and do you see more of that ahead?
Well, I think it's that time of year where you start to get a lot of weather premium coming into the market from South America, and that's part of the reason why we rallied from 13 bucks up to about 13.70 in a fairly short amount of time. But 13.70 is a big resistance level. It's trendline resistance from that July high. So I wouldn't be surprised to see the market maybe take a little bit of pause here, especially with the USDA report just a couple of days away. And if we aren't able to get out above 13.70, maybe you get a little bit of long liquidation from recent buyers, which takes prices back down near the 50 and 100-day moving averages. That comes in 13.30 to 13.40. Looking at the commitment of traders report, funds long just about 23,000 contracts, which is about as neutral as you can get. So I think managed money as a whole just kind of waiting for new news, and that may come later this week with that WASDE report.
Have you been able to tell on cash sales now that harvest is kind of winding down here in the U.S.? Have the farmer cash sales kind of dried up, or is there a flush of it now that they're running out of that free storage period?
Yeah, well, I think farmers still have quite a bit to sell, which has me a little bit nervous about the corn market in particular. It just doesn't look all that great from a fundamental standpoint with the lack of demand, and the supply side obviously really just kind of ramping up as harvest continues to finish up. And so I think there might be a little bit more downside pressure in that December corn contract. I wouldn't be surprised to see us just kind of chop around here in the intermediate term, though. I think where you might see potential movement outside of the recent range is when you get into option expiration and into delivery. I think that's when a lot of maybe longs start to look for an exit there, and I wouldn't be surprised to see the market break lower unless we get some sort of a shift in the fundamental landscape. But I don't see a whole lot of demand coming online here just in the next couple of weeks.
Do you know when they typically start shutting down the the northern shipping channels for the winter?
Yeah, I do not have a good idea on that, so I'm going to defer that question.
Okay, all right, well, fair enough. I know with the recent rains there was anticipation that the Mississippi River levels were going to come up, and that would mean they could fill the barges maybe a little fuller, at least for a while anyway. I just wonder if that has been helping the basis along the river system or not.
Yeah, I think that certainly is part of it. You know, it continues to be kind of a money flow game for us, and what we're keeping a close eye on. We look at the funds and their positioning and what they're looking to do. And when you look at a market like the corn market, the futures really haven't done anything. We've just been a stick in the mud for the better part of the last couple of months. Potentially, we can trade back to 484. That's the 50-day moving average and a recent breakdown point. But again, until these fundamentals start to firm up, I think the bears do have control of the short side of the trade, and that's evident by the positioning by the funds too. They're short about 144,000 futures and options contracts. So they like that short position. They've been defending that short position, and I don't really see that changing anytime soon.
Okay, well, we'll take a look at our cattle and hog market activity here on a Monday when we return after a short break. So, Oliver, lean hogs starting to perk up a little bit here while the cattle are floundering. What do you read into that now?
Yeah, well, I think the cattle are just a little bit disappointed. I think there was some expectations that we're going to see a nice, another exciting cash cattle Friday, and we really didn't get that higher trade that everyone was hoping and looking for Friday afternoon. And we talked about the money flow and positioning and the grain side of things. Well, it's very similar in the livestock side of things. They're kind of moving the market right now. We're not able to get any new news that's bullish to the market, so you're seeing continued long liquidation from managed money, aka the funds. Friday's commitment of traders report showed their net long just about 56,000 contracts. That's their smallest net long position in about exactly a year, going back to last November. So liquidation has been the current theme, and I wouldn't be surprised to see that continue if the cash market can't break out above recent levels. Now, does that mean the market's really just going to fall out of bed? I don't think so necessarily. I think we probably see this December contract trade 180 on the downside, 185 on the top side. So a little bit of a trading range there, I think, for shorter term participation.
Well, of course, the funds had to have lightened up on positions once they gapped lower on the cattle after that cattle on feed report. And that's to be expected. I mean, that was a huge washout for quite a while. But, I mean, if they're getting back in there again right now, I mean, do you just consider that a very large, healthy correction?
It was a very healthy correction. I'm actually a little bit surprised it didn't come a little bit sooner in the year. They had defended a very large net long position for the better part of the year, really dating back to last spring. They were holding a net long position of over 80,000 contracts for multiple months, and they just didn't have any reason to rush for the exits until that cattle on feed report. So I think it was overall a nice reset, and you can see that in the feeder cattle complex as well. They were net long nearly 20,000 contracts. Now they're about flat. So I think that was a good reset, and we can probably start to consolidate and see these markets be a little bit more range bound here going into the end of the year.
All right, Oliver, covered a lot of ground, and I appreciate that very much. Oliver Slope with us. He is with Blue Line Futures, and he is located in Chicago this morning. So, Tammy, there you go. Choppy markets like we expected.